Good morning, everyone. My name is Cassie Hopkins, and I help coordinate the webinars for Hausmann Johnson Insurance. Thank you for coming this morning. I would like to welcome you to today's webinar, Understanding Certificates of Insurance, presented by Taryn Monroe and Kirsten Nelson of Hausmann Johnson Insurance and the Benefit Services Group. Just a reminder that this webinar is interactive and will feature polls and a question and answer session. You can type a question in during the webinar, and Taryn and Kirsten will address it. After the webinar is over, there will be a short survey we are hoping you can fill out for us to give us feedback on the webinar, as well as webinar topics you are interested in learning more about. This webinar will be recorded and will be available on the webinar archive section of our website. Each attendee will receive a follow-up email with a link to the recording and the presentation slides that will be emailed out after the webinar is finished. I would now like to introduce you to our speakers, Taryn and Kirsten. Kirsten joined Hausmann Johnson Insurance in 2017. With her attention to great customer service, she provides care and consistency while handling all client requests. Specializing in contract reviews and detailed commercial line policies, she is quick to find a solution to any problem. She is passionate about serving others and turning their problems around quickly so she can build trusting relationships with her clients. Kirsten holds an associate's degree in marketing from Madison College. Outside of the office, she loves learning new yoga workouts at Dragonfly, hanging out in her pool, and enjoying the beautiful Wisconsin outdoors when it's warm enough to go outside, which it is not today. Taryn joined HGI BSG in early 2018. She excels at providing individualized care to each of her clients and consistently goes above and beyond to handle unique insurance requests. Taryn works primarily with property and construction industries, where she has learned the complex and lively world of contracting. Taryn loves to help others and promotes positivity to provide solutions to any problem. Taryn graduated from UW-Madison with a degree in elementary education and history. When she's not helping clients with their many needs, you can find her walking her dog Bellatrix, leading a book club at HGI, or baking delicious sweets on par with the Great British Baking Show. And with that, I'd like to introduce the speakers, Kirsten and Taryn. Welcome, guys.
Thank you. Good morning. I'm Taryn, and thank you for joining us. We're so happy you're here today to learn about certificates of insurance.
I'm Kirsten. Both myself and Taryn work in large commercial at Hausmann Johnson, and we deal with certificates of insurance every single day. We get questions quite frequently from clients about certificates of insurance and different requests that are being made from the certificate holder. So we thought it would be beneficial to put on a webinar in order to help all of you and our clients better understand certificates. So first, I want to start off by asking, how well do you understand certificates of insurance? So it looks like everyone kind of has a wide range of understanding of certificates of insurance. So I hope the webinar today will be informational for everyone, and you get some takeaways.
All right. In today's webinar, we will start by discussing the purpose of the Certificate of Insurance, or COI for short. We will then take a closer look at a sample certificate and go over the different sections listed on the COI. We will also give a brief overview of the specific language that may be required on your certificate of insurance and how endorsements on your policy relate to this. We will also take the time to share helpful tips on how to request a COI at Hausmann Johnson. We will wrap up today's webinar with a question and answer session. So let's start today's webinar by discussing what a certificate of insurance is not. Lenders, contractors, and project owners are some examples of entities that often request proof of coverage. There is sometimes confusion about the different types of documents that need to be provided to such groups. We would like to start off today by describing other documents related to your insurance that are sometimes confused with the certificate of insurance. A certificate of insurance is not a policy. A policy contains the full terms and conditions of your insurance coverage. Policies can be as short as 20 pages long, but they are typically several hundred pages in length. Your policy will contain all of your limits, endorsements, and premiums. A certificate of insurance is not an endorsement. An endorsement is a legally binding document that changes the terms of your policy. It can add coverage to your policy, alter the terms, or apply specific exclusions. Also, a certificate of insurance is not an auto ID card. You are provided with auto ID cards for each of the individual vehicles that are covered under your policy. These cards provide proof that the vehicle is insured. However, it shares very little additional information. While third parties may request that you provide them with a policy endorsement or auto ID card, a certificate of insurance is typically sufficient if proof of coverage is necessary. It is important to be aware of what document actually needs to be shared with a third party, since each document shares a different amount of information. Now let's take a moment to go over the defining factors of a certificate of insurance.
A certificate of insurance is a standardized document used to provide information on specific insurance coverage and limits. Certificates of insurance serve as informational purposes only and gives no rights to the certificate holder. It is important to know that certificates of insurance are not legally binding, and they are a snapshot in time of your insurance coverage. I say a snapshot in time because throughout the course of your policy term, changes can and may be made to your policy. Even though we stated certificates of insurance are not legally binding, they are still an important document. The certificate provides verification and existence of an insurance policy and includes information on types of coverage and limits. They are typically requested by the opposite party in an agreement, contract, or transaction to prove to a third party that you have the required insurance coverages and limits to comply with the contract or agreement. There are two different kinds of certificates of insurance. So we have liability certificates, also referred to as Accord 25, and property certificates, also referred to as Accord 27 or 28. Liability certificates are used to show proof of insurance and are typically requested by contractors, vendors, and clients. Property certificates show proof of insurance on a building and its contents and are commonly requested by banks when there is a loan involved. Like I stated earlier, there are two different types of property certificates, Accord 27 and 28. Both of these Accord forms do the same exact thing. The only notable difference is that an Accord 28 provides more detailed property coverage. So today our focus is going to be on liability certificates. So let's look at some examples of why you may need a certificate. During our webinar today, we largely focus on the relationship between contractors and subcontractors, which is one obvious reason why you may need a certificate of insurance. But there are endless reasons why you may need a certificate. Some of these reasons include hiring the Madison Police Department or any police department for security at an event, or to patrol a parking lot or building during a specific event or time period. A restaurant having an outdoor patio or seating on the sidewalk, which is owned by the city. Landscaping and or snow removal for a given property. Renting a dumpster that is going to be on the sidewalk or street, which is owned by the city. Hosting a work event outside of your workplace, so holiday parties, summer parties. If you're going to be a vendor at a trade show or expo. And leasing vehicles or equipment. This is not a complete list of all reasons you may need a certificate, but it should give you an idea of the variety of reasons why you may need one. All right, there are 4 types of coverages that can almost always be found on the Accord 25. Let's go over a brief definition of each of these coverages as well as a few examples. General liability protects a business from third-party claims for bodily injury, associated medical costs, and damage to someone else's property. General liability policies can cover a multitude of possible claims. Examples of such claims could include a customer who slips and falls in a restaurant, a paint can falling from scaffolding onto a car, or an HVAC system leaking after it has been improperly installed. Automobile liability protects a business from third-party claims for bodily injury, associated medical costs, and damage to someone else's property arising out of the use of vehicles.
Such a claim might result from a vehicle rear-ending another vehicle after hydroplaning. Another example might be if a driver were to hit a pedestrian walking through the crosswalk at a busy intersection. Workers' compensation is insurance that covers medical, rehabilitation costs, and lost wages for employees injured at work, and it is required by law in most states. If an employee injured their knee while working and needed to miss work due to their injury, work comp can cover their wages while they are off work to recover. In addition, if that same employee later needed knee surgery, workers' compensation can pay for the costs associated with having the procedure done. Umbrella liability provides excess coverage over primary policies, such as general liability, auto, and employer's liability. The umbrella policy is designed to protect the insured from catastrophic events by supplying an additional limit if another policy's limit has been exhausted. On the screen, you will see an example of what the Accord 25 looks like. As you can see, there is a lot of information shared on the Certificate of Insurance, so let's take a look at the different sections of a COI. The Insured box lists the name and address of the policyholder. Similarly, the certificate holder box will contain a name and address. However, this box is filled with the name and address of the third party requesting the certificate of insurance. It is important that the correct address is listed in this box when the certificate is created. This is because your certificate will be sent in the mail at your policy's renewal, and you will want to make sure it arrives at the correct location. There is also a box for the policy number to be listed next to each of the types of coverage. Sometimes the policy numbers will be the same for multiple lines of coverage. However, the policy numbers will often be different from one another. Each policy's effective and expiration date can be found in the column next to the policy numbers. These dates tell the certificate holder when the coverages shown are valid. Once your current policy expires, the certificate holder may request a renewal certificate to determine that your policy is still in force and includes appropriate coverage. The final column of the certificate shows the different limits for each type of coverage. As you can see, there are many different types of limits associated with the different policies. Let's pause for a moment to take a closer look at the most referenced limits that can be found under general liability. Each occurrence is the amount of insurance that will be paid out for one single event or accident in the event of bodily injury or property damage. The limit for medical expenses will cover the cost of bodily injuries towards an individual if an accident occurs on or next to the insured's rented or owned property. The insured does not have to be at fault for this coverage to apply. The purpose of this coverage is to provide care for individuals during a medical emergency and is often defined as goodwill coverage. The personal and advertising injury limit provides coverage for specific types of offenses made against a third party. For example, this may include claims for false arrest, slander, and copyright infringement. The general aggregate limit is the maximum amount a policy will pay for claims within the term of the policy. The last general liability limit that can be found on the Certificate of Insurance is the Products and Completed Operations aggregate. This is a separate limit that provides coverage for losses arising after a project has been completed or a product after it has left the insured's premises. Certificates of insurance also show information about the 4 standard coverages of general liability, auto, umbrella, and work comp. There's also one empty box towards the bottom, which can be customized depending on other coverages that need to be shown on the certificate. For example, this box could contain information regarding pollution or professional policies. If you have any questions about your specific policies listed in this box, please reach out to us or your service team. Finally, there is also a box that is titled Description of Operations. When the certificate holder signs an agreement with a third party, there may be specific language that needs to be listed on the Certificate of Insurance. This box is customizable to include specific language and additional information from the insured's policy. It is extremely important to know that you can only put information in this box that complies with the policy. It is against the law to put false information or information that is not represented on the policy in this box.
So typically under the description of operations, you will start by referencing the project name and number. Then based on the insurance requirements in the signed contract or agreement, we may have to add additional language. The most common language that is requested is additional insured, primary and non-contributory, waivers of subrogation, and notices of cancellation. When any of these items are added to the policy, they are called endorsements. So before we get into what all of this language means, we need to understand what an endorsement is. An endorsement is simply a change to an insurance policy, which changes the terms or scope of the original policy. An endorsement is used to add, delete, exclude, or otherwise alter coverage and may be issued mid-term at the time of the policy purchase or at renewal. If a client has a unique exposure, the carrier may add an endorsement to either cover or exclude those losses. Endorsements are also used more traditionally to add or delete vehicles, properties, drivers, mortgagees. It is important to know that an endorsement is a legally binding amendment to the insurance policy. So let's talk about additional insured first. Additional insured status is commonly requested and is an endorsement placed on an insurance policy that extends your insurance coverage to a third party in the event of a claim. This is typically extended to project owners, vendors, and general contractors, and can be added to most kinds of policies, including general liability, auto, umbrella liability, professional, and pollution liability. You may have noticed one policy that is missing from this list. Additional insured status can never be endorsed on the work comp policy. This is because the workers' compensation policy has been put in place to protect employees, not the company who purchases the insurance. The employer does not have rights to extend the employee's rights to someone else. So the workers' compensation policy cannot be endorsed to include third parties as additional insured. A lot of our policies at Hausmann Johnson include blanket additional insured coverage. This means whenever the additional insured endorsement is required in contract, your policy will automatically provide this coverage. In order for the endorsement to be activated, there must be written and signed contract in place. It cannot be verbal. If your policy does not include blanket additional insured coverage, you can add it to your policy by endorsement for a specific entity, or you can also add blanket additional insured to your policy midterm. Depending on the type of additional insured status, there's typically a fee involved with this. Depending on the contractual agreement, just stating additional insured may not be suffice. You may see requests to include additional insured on a primary and non-contributory basis, additional insured including ongoing operations, and additional insured including completed operations. So what does this all mean? Primary means your insurance will apply first if there is a claim. Non-contributory is when your policy will pay without seeking contribution from other policies that also claim to be primary. Most often, if not always, you will see primary and non-contributory together as they go hand in hand. Ongoing operations provides coverage for claims that arise while the work is being performed, and completed operations provides coverage for claims that arise after the work has been completed. So let's explore how these different types of additional insured endorsements can affect the outcome of a claim. Let's say a landscaping company installed a retaining wall for a general contractor at a local shopping mall. 2 months after the project has completed, the retaining wall collapsed and injured a customer who was exiting the building. The general contractor is sued by the injured customer for their bodily injuries. Throughout the course of the investigation, it was found that the landscaping company had provided inadequate workmanship, but it was also found that the general contractor had placed equipment on top of the wall. This additional weight contributed to the collapse in customers' injuries. So if there was an additional insured endorsement with completed operations on the policy, if the landscaping company had listed the general contractor as additional insured for completed operations, the general contractor would be covered under the landscaping company's policy.
even though the project was already completed for some time. If the general contractor was not listed as additional insured with that completed operations endorsement on the landscaping company's policy, no coverage from the landscaping company's policy would extend to the general contractor for this loss. This is because the project had already ended and the wall collapsed 2 months after it was installed. Let's take a look at how a primary and non-contributory endorsement would apply in this same scenario. If the landscaping company did add the general contractor as additional insured on a primary and non-contributory basis, then the landscaping company's policy would pay for the claim before any other applicable policies, and they would not seek contribution from other policies. This is the case even though both companies were at fault in this situation. If the general contractor was not added to the landscaping company's policy as additional insured on a primary and non-contributory basis, then the landscaping company would seek payment from other applicable policies, and their policy wouldn't necessarily pay first.
All right, so let's move on and talk about waivers of subrogation. A waiver of subrogation is an endorsement on an insurance policy which waives the right for an insurance carrier to seek compensation for losses from a negligent party. Agreeing to a waiver of subrogation is an additional risk to the subcontractor, however, minimizes risk to the general contractor. Waivers are a fairly standard request in many construction contracts, agreements, and leases. They are most common on workers' compensation policies because that's typically where most claims come from on a job site, but they are also common on general liability, auto, and umbrella policies. It is important to know that waivers of subrogation must be on the policy prior to the claim or event happening. Just like additional insured endorsements, you can have blanket waiver of subrogation on your insurance policy. Some carriers even include waivers automatically in their coverage forms for general liability, auto liability, and umbrella. If waivers are not included in your coverage form or you do not have blanket waivers, you can add them by endorsement for an additional premium. In the state of Wisconsin, typically most workers' compensation waivers are an additional $50 premium. If you are doing a job outside of Wisconsin, this charge could be more or even less. In some states, the cost of a waiver of subrogation could be as much as $250. Waivers of subrogation can be a hard concept to grasp, so let's look at a scenario with a waiver of subrogation and without. So say you're on a job site for ABC General Contracting. At the end of the night, an employee of the general contractor notices a hole in the ground and decides to put a flimsy piece of plywood over the hole. The next morning, an employee of the subcontractor, XYZ Subcontracting, walks into the job site, walks on the plywood, and falls through the hole and gets injured. XYZ Subcontracting's workers' compensation policy will pay for the injuries of the employee. It is then determined by the subcontractor's insurance carrier that the employee was injured due to the faulty work of the general contractor employee. The subcontractor's insurance carrier will then seek payment from the general contractor's carrier. So without a waiver of subrogation on the policy, since the general contractor is negligent, the subcontractor's insurance carrier can seek payment from the general contractor. With a waiver of subrogation, the subcontractor's insurance carrier cannot seek payment from the general contractor, even though they were negligent. Another type of endorsement that may be required by an agreement is a notice of cancellation. When this endorsement is added to a policy, it requires the carrier to send a notice to the certificate holder, stating that a policy is expected to cancel within the allotted number of days. The most common length of notice required is 30 days. However, agreements can require other lengths of time as well. Typically, this endorsement will not result in any additional premium for the policyholder. It is also important to note that many carriers won't add notices of cancellation to work comp policies. It is important to review contracts for insurance requirements before signing them. If you are ever questioning what something means, always reach out to your service team, and we will make sure you have the appropriate coverage and/or advise on our thoughts on requirements found in contracts and agreements. So let's look at some do's and don'ts of requesting a certificate of insurance from us here at Hausmann Johnson. So we ask that you do provide us with the project name and number. I would say 9 out of 10 times there's going to be a project name and number, so please just ensure to give us this information. Once in a while, and mainly with smaller companies, there may not be a project name or number, so that is okay too. Do provide us with the entire contract, including insurance requirements. We ask for the entire contract because sometimes the insurance requirements will reference information that is found in another part of the contract. Receiving the full contract will minimize the back and forth correspondence to ensure we get the certificate over to you efficiently and correctly the first time. Lastly, please provide us with the information as soon as possible. Sometimes you may not be awarded the project yet, but we can still review the contract and insurance requirements and advise on our thoughts and let you know if any requirements will result in additional premium. You can then build the cost of this additional premium into the contract if you are awarded the job. So don'ts, please don't sign the contract before we review it here at Hausmann Johnson. We like to review contracts before they are signed so we can make sure you have appropriate coverage and advise on any requirements that may be an additional cost to you. If we review the contract after it is signed and you do not have the appropriate coverage, you just found yourself to comply with those requirements and will have to make the appropriate changes to your policy, which more than likely will end up accruing additional costs. And then another obvious don't is don't make your own certificate. We have great service teams here at Hausmann Johnson, and we will get the certificate to you in a timely manner. So with that being said, we have another poll question. What is Hausmann Johnson's promised turnaround time for a certificate of insurance request? All right, so it looks like most of you know the answer. The answer is 24 hours. That is our promise to our clients. So we will email out the certificate of insurance within 24 hours of receiving the request during normal business days, so Monday through Friday. If we receive the request on a weekend, we'll get it to you first thing Monday morning. Certificates of insurance requests are a high priority at our company, and more than likely you will get the certificate back well within those 24 hours. If you need a certificate of insurance within a short time frame, please mark your email with high importance and we'll get it over to you as soon as possible. How many of you guys know how to request a certificate from Hausmann Johnson? Or do you know how? So it looks like some of you do, some aren't sure. So it's as simple as sending an email to your service team with the information we discussed. So project name, number, and full contract with insurance requirements. All right. Before we wrap up, let's go over the information that we shared in today's webinar and the main takeaways. We started off today's webinar with talking about the different types of information that can be found on the certificate of insurance. We hope that you learned more about what this information means and now have a better understanding of what the specific language is evidencing on the certificate. We also discussed how requirements in a signed contract can affect your policy in order for your certificate of insurance to be compliant. We encourage you to have your service team here at HJI review contracts and agreements or insurance requirements in order to avoid unwanted changes to your policy or additional premium. We also reviewed what information you should provide to your service team when requesting a certificate of insurance. The items that we covered today are the most commonly requested items of a certificate holder, or items that a certificate holder will ask of you. But be aware that a certificate holder can ask for whatever they would like on the certificate of insurance, even things that are against the law. So we hope that you enjoyed today's presentation on certificates of insurance. We would like to open the floor for questions, but before we do, we're going to ask you one more poll question. So if you could let us know, how would you rate your understanding of certificates of insurance after this webinar?
All right, looks like there has been some growth and understanding. Glad to see that everyone knows something about certificates of insurance now, so that's great. So now we are going to take the time to answer your questions.
So if you would just like to type your question into the chat feature, or you can also put it in the questions feature as well provided on GoToWebinar. And it looks like we already have a question that came through during the webinar. And this question is when quote, umbrella follows form, unquote, is written, what does that mean? Does it also apply to additional insured and waiver of subrogation?
So umbrella follows form means that it follows the underlying liability coverage form, so the general liability and the auto. If your underlying coverage forms include additional insured and waivers of subrogation, then it will also apply.
All right. We got another question. Is there a substantial difference between umbrella liability and excess liability?
They're very similar. I think I want to make sure I answer it. It's a little complex, so I might provide you with a specific email later to give you an exact definition of the difference between the two. But excess definitely goes over and above your other policies, like your general liability and auto. And umbrella is a little bit more, can be more of a standalone item, but it can also provide additional coverage to your other policies. We can follow up with you with more specifics.
All right, here's another one. This business, they lease their trucks. Do they need a COI from them?
More than likely, yes. It really depends on the leasing company if they're requiring a certificate of insurance from you. I would say most companies are going to require you to have a certificate of insurance, but if they're not requiring it, then it's not necessarily needed.
All right, next question is the aggregate limit a per year aggregate or life of policy limit?
That gets a little more complicated because you can add endorsements to your policy to make the aggregate per project, per location. So if we're just talking about a basic policy with none of those endorsements, then it would be for the life of the policy term. Most of our policies here at Hausmann Johnson aren't just those basic things. We do endorse the policies with per project aggregate. So if you have a question about your specific policy, definitely reach out to your service team or we can follow up with you as well.
Another question came in. Do you recommend requiring coverage higher than state statute for workers' comp?
That's really up to you. I don't want to provide a recommendation specifically, but that is the minimum in the state, and I would say typically we suggest that our clients carry higher limits than what the state of Wisconsin would require. It's up to your business if you want to have your, I guess it's like the people you work with to see if they should have higher limits and talk to your agent specifically to see if you think that the people you work with should have higher limits. Do you have anything to add, Kristen? Sorry.
Yeah, I definitely think that's something you should talk with your agent about and they'd be able to advise you better. It kind of depends on what your business does too. So your agent would definitely have a better understanding if they recommend higher limits.
All right, here's another one. You stated that agreeing to a waiver of subrogation is an additional risk to the subcontractor, so why would I do this?
So you're right. Typically, you would want to avoid adding waivers of subrogation to your policy if possible. You can negotiate the terms of your agreement to have this removed from the requirements if you haven't signed it yet. Unfortunately, if the other party refuses to remove the waiver of subrogation from your contract, you will either need to add it or pull out from the project. Otherwise, they may have the right to refuse payment for you if you're not compliant with your certificate or your coverage on your policy.
Good answer. What if a contract is requiring a waiver of subrogation but I don't want to agree to it or pay the additional fee?
You have a couple different options if you don't want to pay for it. So you can reach out to the party you are entering into an agreement with in order to negotiate the terms of your insurance coverage and have this requirement removed. If you are bidding on a project, you can factor in that $50 charge into the cost of completing the project and increase your bid accordingly. If your contract is signed already, though, that is a legally binding contract. So more than likely, if the third party is not willing to work with you, you will have to add the waiver of subrogation for the additional charge.
I often see that CG 2010 and CG 2037 endorsements are required in my contracts. What are these?
So these are ISO forms, and they're issued by ISO, which is the Insurance Services Office, and they create these standard documents for insurance. And the CG 2010 and CG 2037 ISO forms are both standard, and they can be included on your general liability policy to provide additional insured status to another party. So the CG 2010 can add an additional insured with respect to ongoing operations, and then the CG 2037 adds additional insured status for products or completed operations. If there is a requirement for either of these forms on your contract, it will often say something like CG 2010 or equivalent. And that's because a lot of carriers will have their own versions of these endorsements, so you might not specifically have that CG 2010 or 2037 listed on your policy, but you'll have an endorsement that says similar information.
Okay. Are there any scenarios where an umbrella will not cover excess workers' compensation claims?
Not that I'm aware of. As long as your work comp policy is scheduled on the underlying schedule on the umbrella policy, it should always cover. We don't really work with claims too much, but there's no reason that I know that the umbrella would not cover any excess, unless there are certain terms in your policy that need to be specifically looked over.
All right. Should we insist on a certificate only using the latest Accord form?
That's something you probably want to talk to your agent about, depending on what your needs are. I know that the language changes as the forms get updated, and sometimes if the language changes in a certain way, then certain coverage isn't applied anymore, so you might need two endorsements to cover the same thing that used to be covered by one endorsement. So it's important to stay on top of the latest Accord forms and talk to your agent about what those might mean, because you might want to consider what changes are being made and stay compliant.
All right. What if the company doesn't use Accord 25? Is that acceptable?
For certificate of liability, an Accord 25 is really the only option.
I have seen certain carriers. I have seen one carrier that issues something that's not an Accord 25, but it looked identical. It just didn't have the worded Accord 25 on it. We try to stick to Accord, like we really do push that there should be an Accord 25, but I think it is possible that the carrier cannot have an Accord 25. I've seen it before. I don't know why they wouldn't use the Accord 25, but yeah, it's possible, but hopefully you can get the Accord 25.
Any more questions? This is kind of the final call here.
So there was a comment made that West Bend and Erie Insurance have their own customized forms. So when we talked about the CG 2010 and 2037, those are just standardized forms put together by the insurance services office, but a lot of carriers will customize their own forms and have their own form numbers. So whenever you see that request for CG 2037 or 2010, you also more than likely will see or its equivalent.
We just want to thank you guys so much for attending today's webinar. This is our last webinar at 700 Regent Street. We are going through the process of moving, which is very exciting. So thank you so much for being with us on our journey of 2019 webinars. If you would please fill the short survey out because your feedback is extremely important to us. And then we hope that you can join us for our next series next year. If you guys would like to write down Kirsten or Taryn's contact information, I have put it up on the slide, and they will be happy to get back to you with any personalized comments that you have or any questions you have as well. And again, let us know any webinar topics you're interested in learning more about next year in our survey, and we appreciate any and all feedback. Thank you very much for attending, and have a great rest of your day.